So we've been meeting our customers over the past few days, and one of the most important questions before everybody in India is what happens to the economy and what happens to the policy on the back of surprising election results. We at ANZ Research have 4 key points to share. First of all, given the developments that have happened over the past couple of days, there is a bit of signal of policy continuity, which the markets have cheered. Prime Minister Narendra Modi is leading the government and is also keeping a lot of core ministries to the ministers who were leading those in the previous government as well. And I think the sense of policy continuity is a very soothing aspect of the developments in the last few days. The second bit is about, what's going to happen to the fiscal policy. Of course, after India's long struggle with fiscal prudence, we are in a very good shape right now. Is there any risk to fiscal discipline going forward? Our view is that there is no fiscal risk in FY25, that is the fiscal year ending March 2025. The government will have enough resources, especially on the back of the bumper dividend transfer from the Reserve Bank of India, to meet any spending requirements on the social sector accounts if there is a need, without sacrificing the fiscal deficit targets and the capex outlays. But we do think that the government's fiscal resolve will be tested in FY26 and the years beyond. There would be a need to balance the quality of spending against the need to lower the fiscal deficit ratio further. Well, thirdly, about monetary policy, we think that the policy calculus for the Reserve Bank of India hasn't changed at all because of the election results. The Reserve Bank of India will remain focused on bringing inflation down, well, because growth is so good. At the same time, they will try to maintain the rupee stability. The last bit is about policy initiatives and reforms. We do think that even in the third term, the government will continue to focus on policy initiatives in areas such as manufacturing and exports. There is a near consensus that we want high GDP growth to trickle down to the grassroots level in the economy, for which we will need these policy initiatives to continue. However, when we are thinking of big bang reforms like land, labor, and agricultural markets, we think they could be politically sensitive, even contentious, and therefore that reform momentum may slow down a tad, which may have a slightly negative sentimental impact on things like FDI. But we do acknowledge that India's solid growth fundamentals do very much remain in place despite the surprising election results.